Hello everyone, welcome to this week's weekly market view. Today is Monday the 20th of June and we are going to be doing the review for this week from 20th of June to 24th of June 2022. My name is Vishal and we are going to be looking at some important charts for this week and let's get deep dive down into the analysis. All right, so let's start with the Nifty analysis for this week, and let's start with the monthly chart. So we did have a area of demand, and seems like now we are violating that area of demand. So things are looking a little bit bearish on the monthly chart. Now we have this new level in the making, but we also need to take into consideration that we do have another level of demand sitting right below, and there is a possibility that the market might take a little bit of support. And as we speak right now, the prices are into that monthly level of demand. If we look at the weekly chart, we are still in this entire weekly consolidation. In fact, this was the weekly demand, and after multiple retests, this weekly demand has got violated. So now we have a new area of supply on the weekly, and let's go ahead and mark it. So we do have this area over here, which is this rally based drop, which is an area of supply, and we do also have another drop based drop over here. Uh, Obviously, this is the better area of supply because we also have a daily level of supply coinciding here. If you look at the daily chart, we do have this drop based drop, but the structure of the level is not great, and I would more or less look at this gap level over here in case I'm looking purely to short the Nifty around 16,168 odd levels. Now here you can clearly see that the volatility has substantially increased in the past few days, and the current volatility situation is showing us that the option premiums are very expensive. So right now, if you are in a directional mode, it will be good to do some credit strategies as a part of your portfolio. If you are in the non-directional mode and you are trying to play a consolidation or a range-bound market, then you can deploy some non-directional credit strategies as well, right? So if we just move to the right-hand side now, and the key area which is still playing out right now is this entire consolidation over here. So this is going to be a very crucial area for the Nifty. And if we have a break of 15,123 to the downside, then things will start looking a little bit more bearish. If we do tend to hold on to this level, things might look like the market might give us a little bit of a bounce. Whether that bounce will sustain or no, we don't know. But that's what this demand zone is all about. And right now, currently, we are trading inside that demand zone as we speak. Let's go to the Nifty Bank and let's analyze the banking sector now. So the banking sector is also, just moving up and down with a lot of volatility. As compared to the Nifty, the Bank Nifty is comparatively okay in terms of the strength. We do see some selling pressure coming in today. So we had a gap up open, and now we are seeing a little bit of selling pressure coming in. We do have this level of demand over here, which is on the daily chart, which is right at the this gap level over here, and it'll be interesting to see how the Nifty reacts to this 31,700 odd level. Other than that, we do have a supply zone, and that supply zone is also located right here, very similar to the Nifty supply zone. So we are closer to the higher time frame level of demand, but we are still far away from the supply level. So markets are looking a little bit bleak as of now, and there might be a little bit of more correction in this market to the downside. Let's look at the USD INR. And if we look at the USD INR, after a long period of consolidation, we are seeing this gap down. So this gap will have significance because this gap is in the context of an uptrend. So this is a professional gap, and if the market does revert back to this gap, we might tend to see a bigger fall in the USD INR. The way USD INR and Nifty are correlated is that they are inversely correlated. So generally, when the Nifty moves up, the USD INR tends to move down, and when the USD INR tends to move down, the Nifty tends to move up. Right. So this is more or less the correlation, although it's not 100%, but still we can gauge the movement of the market from the USD INR. So this is an area of the USD INR, the 78 handle, again a round number. So a very, very important number to watch out for this week. And if we do see a retracement back into this level, we might see a bigger fall coming into the USD INR, and that will lead to a substantial rally in the market if that does happen. So let us wait and watch for this week. Let us see if the levels play out as expected. We'll come back next week. If you do like our analysis, please do not forget to subscribe to our Sharekhan Education channel. So do press the like button and do make your subscription. Until then, next week, take care everyone. Have a safe trading week. Goodbye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.